before we start going through the list of what I anticipate I'm going to be able to deduct, these are basically, these are things I'm characterizing as business expenses, but for them to fit as business expenses, they have a certain, they have to fit a certain definition. That's my understanding. So can you go to the audience how that works?
Okay, so in order to take, there's a revenue code, there's an IRC, basically all the tax laws. So I think it's section 162, expenses, deductible expenses, and in general, an expense has to be ordinary and necessary.
Okay.
In like a profit motivated entity, the trade or business for profit. Okay. And the reason I say for profit.
You determine that if it's ordinary or necessary?
Well, when you file a tax return, you're determining that you're doing, and then if it gets looked at, which usually probably won't, very few returns get looked at. That's when somebody looks at it and be like, no, I'm not allowing.
It's like,
that.
What was your logic for doing that? Basically?
And I get in front of the IRS a lot, and like meals and entertainment, they changed some of the rules, but like with a car, someone has a car and they're supposed to keep a log, they never do.
Yeah.
Meals and entertainment, I don't even fight with the IRS about that. Those things I kind of throw away.
Wait, so for a business card?
Let's say you're entitled to take an expense, and the two ones that are going to have the most I guess personal. A lot of people run personal expenses through businesses, and the two expenses that always a lot of crap, so to speak, is going to be meals and entertainment, and there's going to be and like auto's another one where they don't. You have to substantiate your expenses, so you're supposed to keep your mile log. Mm-hmm. How many people keep a mile log?
What? That's on the odometer of a car. That's my log.
No, but you're supposed to keep that.
Let me jump in a little bit, right? So let's say you have a car, right? For example, like I own a car, mm-hmm. right? And the funny thing is, so I own a Tesla, and I don't know if those miles matter as much as a regular car. Maybe they do, maybe they don't, because it's a different wear and tear on the vehicle. Yeah. I'm not sure what metric IRS is using, but so like I own a car, right? Now that car, I use it to get to my this is my new job, and I got my old job, right? Mm-hmm. If I go to my old job, that's not tax deductible because that's use not associated with this business, right? So then basically, to do it correctly, I would have to basically mark out when I'm using a car to visit you, to do work, to do site, like whatever work we're doing. We do most of our prep for this show in bars. Now, me getting to that bar, right, as long as I'm doing business, that would be tax deductible. But how do I differentiate the use of a car from business and not business? That's what he's saying is basically, to do it correctly, you would have to.
Yeah, and that's the thing is when you get before the IRS, like on audit, they're not taking your word for it. You got to show them. You got an auditor. Auditor just wants to see, like, okay, where's your auto log? They changed the rules with meals and entertainment with the new Trump law, but in the past, meals and entertainment, they want to, you took somebody out to a club or to dinner, who do you take out? What was talked about? They want to see that. And like for me, when I'm representing a client, I don't want to have that fight. Like those are fights that like I pick my battle, so to speak.
Ordinary and necessary. Explain that to the audience.
Okay, so ordinary is basically like, depending on every trade or business is going to have its own, like, I guess, type of expenses. An expense for like a chiropractor is not going to be the same as a wine distributor. Okay. A chiropractor is not taking clients out to lunch or dinner, or they're not doing that kind of stuff. They're not traveling. They're not, a salesman might travel. So ordinary is basically going to be common expenses for that type of industry. So something that they would
like skydivers need to jump out of planes. Not fucking.
Okay, if you had a sky, okay, you're not buying plungers. But if you had a skydiving company, your planes, what do planes use? They use gas, and they use a lot of gas.
Yeah.
So they're gonna have a huge gas expense. Where like, you know what I mean? So that's gonna be basically the ordinary. The necessary is easy. That's just basically if it's helpful for the trade or business. And the trade or business has to have a profit motivation, because you see sometimes the IRS is going to come in and say, no, that's not a trade or business, that's a hobby. You have to make money 2 or 3 years. I love horses. I'm big into. I want to be a professional gambler. dude, you're no professional gambler. You know, like, so there is, it has to be like a profit motivation. It can't be like a hobby. And the other thing with the expenses that I want to tell you is, in general, like an expense, it has to be, if you're going to take it that year, it has to be something that's going to probably be used that year. So if you bought a $50,000 car, right, you can't take it all that year. Technically, you can't. There's a Section 179 deduction where if you had income, you might be able to take it that year. But basically, if you're spending money and you're going to get the benefit of it for multiple years, you're supposed to depreciate it. So you capitalize it. So that makes sense, right? You're matching your expenses with the income that it's going to help you produce over the life of the asset, right? Make sense, guys?
Yeah. So I'll give you an example. What if I paid for this episode last year? I'm putting out my last year taxes, or am I supposed to put on this year's taxes even though I paid for it last year?
So most people, like, so there's cash basis and accrual basis.
Okay.
So by default, Schedule C, you're basically a cash basis. So it's when you paid it.
That's what my
when you're going to take
hope.
the deduction.
That's why I paid for this episode last year.
So a lot of people, what they try to do.
Got your bitch. Swag. Attorneys with swag. Attorneys.